Gene, we've been talking about some of your quasi-comforting comments about a rally, potential rally in technology, but we're paraphrasing it with a bear market rally. So what if it was a rally that turned into something more than a bear market rally? Would you just change your tune, or are you sure that it's a rally in a bear market that's destined to fail, or could it be something more than that?
I would say there's a 20% chance it's something more than that. The reason I believe that this is, I think there's going to be a rally. That's the positive. I don't want to bury the lead here. The reason I think it ultimately fades is that the Fed has public enemy number one, inflation. They have a dual mandate that's stated, but they have drifted away from that. The key factor here is inflation. And their ability to continue to fight that is going to be the biggest mechanism, of course, is going to be through interest rates, and that is negative for tech. I just fast forward 2-3 months from now and thinking about that CPI number and think that it's less likely that we're going to see the CPI numbers sub 4%. We need to get down to those kind of numbers before the Fed starts to back off. So, Joe, the spring is pushed down hard against these tech companies. I want to quickly frame that in, and I think that it pops up here. But ultimately, this continued persistent higher rates longer is going to be negative over the next, call it 6 months. And if I can just kind of quickly frame in the optimistic side, there is an investor piece to this, and then there's traders. For investors, the formula is pretty simple. You own the strongest company, that being Apple. You framed in what's happened with Meta and Netflix and broader NASDAQ down 31%. Apple's down 17%. Some people say that's a reason for it to pull back. I believe that the reason why it's down 17% is they're fundamentally in a good place with their products. We've checked iPhone demand over 8 countries in the last day through lead times. They continue to be elevated. Usually you see them pull back, but that is, I think, a safe haven Apple. And if I can quickly kind of frame in this spring back related to some of these other tech companies, there were 10 high flyers, or I identified what I consider the biggest 10 high flyers in 2021. Those stocks on average are down 70% year to date. But what really caught my attention in anticipation of this bear market rally is that they have an average short interest of 12%. And typically, these types of companies would have a 3 to 5% short interest. Big tech has a 1% short interest, just to give some perspective. But that 12% short interest can spring back nicely. And this is not investment advice, but I think you could see some of these companies back up 30% in the next couple months.
Well, that's what I mean. So I don't know. So that if it were a 50% retracement of the sell-off, that's definitely a tradable bottom that you're making. But I don't know if you actually need to keep calling it a bear market rally. Would you have a problem long-term holding these stocks from these levels? Because if you're saying it's a bear market rally, let's say it has a nice bounce like you just described, you expect new lows? If you don't expect new lows, then why are you calling it a bear market rally? If you're not expecting it to retrace all of the bear market rally to new lows where you can even get a better entry point, then why not just call it an entry point now for stocks like Meta? If you loved it 62% from here, if it's down 62%, maybe this is just an entry point, not a bear market, not a rally, not just a tradable rally.
That's a fair perspective. My sense is that the reason why I'm not calling it, the bottom or just own through that is that I could see this, I talk about a 30% over the next couple months. I think you could see kind of a retracement. Maybe it doesn't give all of that 30% back, but enough of a retracement where people will say that this was a false start. Ultimately, you're getting to the real A topic here, which is what's going to happen with these companies in 2023. And I think 2023 is going to be a great year for tech. I think all of the pain that we're seeing right now is resetting growth rates. We're going to get back to higher growth rates. Loup does own Meta. I didn't highlight that one as a safe haven because there is a lot of controversy around it. But ultimately, I would agree with that perspective is that if you have the luxury of owning some of these for a year plus, these are the opportunities. In the time that I've been following tech, I can't remember. Actually, I can remember plus years ago after the dot-com, I think there was a sense that these companies, all of them are going away. But I think if you have a perspective that you can hold something for a year and a half plus, I think you'll do well, even with these high flyers or the big tech.